it is a hump day, and we're excited to have everybody on. So we're on our second or maybe third cups, and everyone's getting on. But good morning to everyone in the Asphalt Life community. So excited to have you on, and excited to be talking about a topic that really is the nuts and bolts of what a lot of contractors are dealing with today, which is financing and how to make financing simple, how to understand financing, how to go to market with financing. Um, with COVID spreading around, people are needing to have options. And it's become more and more important now than ever to have those options. And so if you're joining, glad that you're on. If you're joining from your web iPad, you should be able to see in the bottom right hand corner some hearts where you can jump in and say hello, give us some hearts, say that you can see us. Yep, appreciate those. And also another way to chat with us is going to be via chat. So jump in the chat, say good morning, let us know where you're listening from and that you can hear us loud and clear. Good morning, Teresa. Glad you're on. Let us know where you're listening from. I see some hearts. I see a lot of notes. Put something in the chat. Good morning from St. Louis. Scott Carrot says it's a good life in St. Louis. And good morning, Robert. Denver in the house. Hey, Dustin from Nebraska and Bill from Virginia. I love it. Our Asphalt Life community is showing up, ready to empower our customers with more and more information. And so that's why we're doing these webinars every week. Excited to have all of you guys on. Alex Baker says Jacksonville, whoop, whoop. And Liz is on. Good morning in Cincy. We got Michigan in the house with Dean Gear. What's up, Dino? Glad you guys are on. So today we're going to be talking with Mike O'Connell, and I know Jeff, you're have a lot of experience talking with Mike and really kind of drove this partnership with PowerPay, and so I'm really excited to be able to learn more about our partnership with PowerPay, as well as some of the really exciting things that they have coming down the pipeline.
Yeah, we're very excited about having PowerPay on board. And for those of you that don't know me, I'm Jeff Key. I'm the Director of Marketing for Atlas. This is my first experience co-hosting the Wednesday weekly webinar, so I'm pretty excited about that. That's right. That's right. So I'm looking forward to it. I've been in building products, manufacturing for about 28 years. A lot of you Atlas folks know that I came from Georgia Pacific. I was there for 21 years. I am now a 2.5-month veteran at Atlas, and I'm having a great time despite the circumstances. I'll tell you, I've learned. I still know very, very little about financing, but I've learned a lot since I've been at Atlas. I'd never realized financing was such a huge part of what went on in the channel on this side of the business. We never really dealt with financing at the other companies I worked with. So, I remember going back to our national sales meeting. There was a huge segment on financing, and I'm looking around like, wait, nobody told me about what is this? And it was like my third day on the job. So I was like, well, I better get up to speed on some financing. So, yeah. And that was really before the.
I was just going to say, Jeff, it's really interesting because, we in building material space, because we do service homeowners is our end users within the shingles and underlayments. It is so important that they have financing options. And like you said, I think on other building materials lines of business, more commercial spaces, it's not as much of a conversation, but this is something that contractors have to be equipped to know right now. And I think it's really taken our industry and market by storm, and is the new wave of options for a homeowner. You go into Home Depot today, and that is one of the main things they're talking about. Jump on a Home Depot credit card or utilize their financing, which is through some specific partnerships. And so it is very important that homeowners have options. And, I know I talked about it on our last webinar. Even ourselves being, having some more time at home, you start to notice things that are in your house. You're like, oh, I need to upgrade that, or I need to fix this or that. And so financing makes kind of pays that way and helps to open up those doors. So I'm excited. I'm excited that, for this topic that you guys are going to tackle today. And yeah, so Jeff, I'm going to throw it to you to go ahead and walk through the agenda for today.
Yeah, Claude, you want to flip to the next slide there? Yeah, it was kind of funny. This relationship with PowerPay has kind of evolved basically over the last 3 weeks. So Mike has been great. We've had a lot of back and forth, and have really liked the things that they've had to say, how they differentiate themselves. And it was funny. We asked him. I think I sent him an email on Friday afternoon, late in the day, saying, "Would you like to be on the webinar on Wednesday?" And he said, "Yeah, no problem, great." And then I said, "Well, let's get together on Monday and talk about it." So in the meantime, we need to send out an email, right, to let people know we're going to have a webinar on Wednesday. So Tiara said, "Well, why don't we call it the 5 steps, to better financing or something like that?" And I said, "Hey, that sounds good to me." So Mike didn't even know the topic. We came up with the title and the topic for the webinar before we ever talked to Mike. And I believe we kept him up late a couple of nights putting this presentation together. So he has passed the test.
Yeah.
The only other thing we need him to do is say weekly Wednesday webinar. No, is it Wednesday weekly webinar 5 times real fast, and you're in the. No, I'm just kidding. We got a lot to cover, so you don't have to do that. So on the agenda today, we're going to talk about, or Mike is going to talk about, and I'm going to learn 5 stages of finance, 5 steps that help make PowerPay financing simple, and how to get set up with PowerPay. So Claude, let's talk about Mike on the next slide. Or I can just talk about what I know about Mike. He is so Mike is the strategic accounts manager for PowerPay. He's been in home improvement lending for 4 years, specializing in OEM and distribution channels. He has put together some lender partnerships with other shingle manufacturers in the past. He is only working with Atlas today, which is great news for the Atlas community. And actually had a home improvement business that he sold in 2016 after 9 years in business. So Mike is in Louisville, Kentucky. I made sure that we pronounced Louisville correctly before I introduced him. So Mike, so glad to have you here today. Welcome to the show.
Thanks, Jeff. Thanks for having me. Really appreciate all the time and headway you gave me to get this presentation over to you guys. I am really excited about this. It was fun. I love hitting curveballs, and TR giving me the topic was a challenge, and it's fun. So here we are at bat. I do want to share with the Atlas family that I've been in the space for a while, really got to know Atlas, jealous that I couldn't be a part of the community, because with my other lenders, we had other relationships that we were working. So whenever I made the decision to move over to PowerPay, it was singularly because this program is geared towards the roofing community. It's what I love. And one of my first calls was over to Stan. Stan, this is it. We need to get in the game. I want to be a part of the Atlas family. And here we are. So with that, Tiara asked me to talk about the 5 steps that make financing simple that PowerPay delivers. But it's been my experience in the roofing community that there's really 5 stages of financing evolving inside your business. And it starts just like our stages of grief. It's going to start with denial, that I don't need financing, it's not important. And then you're going to realize you're going to go through the anger period on, maybe we're losing some jobs to some competitors that are offering financing. We're going to talk about that. Eventually, we're going to settle on the issue on maybe we're going to bring it into our organization. We're going to experiment around. There's a lot of choices in this industry, and I believe that PowerPay is uniquely positioned to be the best lender for the asphalt roofing family. And once we experiment it, we find the solution that works for it, you accept it, you embrace it, and the business grows. So we're going to cover all 5 of those real quick. The first stage is denial. Well, actually, we'll go back to the 2 different business models. This is where financing can be difficult in the roofing space, is that we have 2 completely different business models at play. Now, our retail sales businesses, they get financing. In fact, they may have led with it from day one. We understand in a retail community where we don't have the insurance in play, the importance of selling on a payment option. But those that have built their business model around the insurance companies and working on with the restoration side, financing may be new to your organization. And we get it. There's a lot of reasons why it's not a perfect fit, maybe a square peg and a round hole for that business model until PowerPay came around. And I'm going to share with you how we uniquely fit into that asset class. So with that, that moves us over to the very first stage, denial. Financing, I don't need it. I hear these 4 objections everywhere I go. I've traveled from coast to coast, and I keep hearing the same thing about financing no matter what conference I'm at. It's 1, my customers never ask about financing. 2, all my customers have the ability to pay. 3, that I don't understand the market because your market is price sensitive and it's unlike every other market that's out there. Fair enough. And then fourthly, that financing, it doesn't really apply to me because I only work on insurance claims and that's our jam. That's great. I'm going to show you how we can add some peanut butter to that jam. So the first one, asking, my customers never ask about financing. Well, the reality is, guys, customers are uncomfortable sharing with you their cash flow position in life. So if we go ahead and make it easier for them, you're going to increase the sales ability. Let's look at this. 75% or more consumers are likely to make a purchase if a simple, seamless payment plan is offered. Offer it up to them and you'll get more bites on the apple. That's what we're saying here. It's if you're leading with, do you want financing? Are you interested in financing? That's uncomfortable to the homeowner. They're saying, what are you saying? Hey, Mike, are you telling me I can't afford your services? That's rude. Don't be rude. Just tell them that you have payment plans available. And you know what? We'll cover that at the end once I better understand the scope and estimate of the services that you're asking for. That's a pretty easy solution. Because if you deliver price the right way, you're going to close more sales and oftentimes have a higher service ticket. The next question I often get asked is, well, here we go. This is just rephrasing on the cash flow position that homeowners don't have the cash in hand for our services outside of deductibles. And so our second objection is my customers have the ability to pay. Well, I don't know where your customers are, but the customers that I was talking to, all those $100 bills under the mattress are gone away. If you look at what's happened just in recent times, we've been on a 10-year ride and times are uncertain. Not only that, but we're dealing with a pandemic. So I know with tomorrow's money no longer being guaranteed, customers are going to respond more to payment offers. Even if I had the cash stuffed under my mattress and you presented a low monthly payment that allowed me to keep that mattress there, that mattress money, I'm going to pick that option. That's how I buy. And for those that say that
I think we
only work, yes, sir.
I think we skipped over a slide or went through a slide kind of quickly there before with a statistic on there. That's amazing to me, and I've heard statistics similar to this before. Only 43% of Americans would be able to pay for a $1,000 unplanned expense, and I would imagine the vast majority of re-roofs are unplanned expenses. When you look, people want to put granite countertops in and new tubs and light fixtures. I think the roof is typically pretty low on the list unless water is pouring into their living room. It's something that they really don't want to pay for.
That's right, Jeff. And think about it. The Atlas contractors who are watching right now, every one of them will tell you that they have competitors in their market that are offering to waive the deductibles in order to capture the business. The reason that exists is because of the cash position of homeowners. Knowing that the majority of the market doesn't have this money set aside, I haven't found a single customer yet that has set aside $99 for the last several years in order to cover that deductible. It is unplanned, it's unexpected. And when we look at the pie graph on the right-hand side here, we look at, what is that? The vast majority of Americans have less than $1,000, but almost 3/4 have less than $5,000. In a retail market, not very many roofs are less than a $5,000 expense these days. So if we want to talk to more than just 1/4 of our market, we need to have payment options in play. So that kind of moves into the next slide, where we were talking about that all of our customers have the ability to pay. We understand that they're uncomfortable talking about it. We realize that they don't have the ability to pay, but those that may really love spending other people's money first. And that's what financing allows us to do. So if you're working uptown, downtown, around town, in town, I don't care where you are, those affluent customers that can write that check, give them the ability to not write that check, and you will earn that business. So the third objection that I hear is that I don't understand the market that they're in, that it's very price sensitive. And I hear this everywhere I go, and I get it. It is cutthroat from coast to coast. But the reality is that our customers today buy on payment options. In every space that's outside of home improvement, it is the leading marketing play here. From appliances to furniture, look, even dentistry, cosmetic enhancements, vehicles. Everyone is positioning a finance product first. If we're using this in our marketing, it's going to generate more leads. Even in the restoration space, having a payment option advertised on the front end makes those customers who can't afford the deductible more likely to call, because they realize that you have the solution that their family needs. So the last one being that financing doesn't apply. I only work with insurance claims. Well, let's face it, guys, deductibles are changing. The insurance companies are changing the game. The enforcement of the deductibles is changing. Everyone in Texas, I know you're feeling my pain. Okay? We have to collect the deductibles. Insurance companies are forcing the issue by changing the way that they write the policies. Our ACV policies are creating a much higher out-of-pocket expense for our homeowners. Percentage deductibles now are taking deductibles well north of $2,000. We can no longer stay competitive, waive the deductibles, play the shell game with this. We need to have the ability to collect the deductibles, and there's no easier way than presenting a financing option. But let's face it, financing is going to solve the #1 issue that puts roofing contractors out of business. And let me say that again. Financing will save you from the #1 problem that puts roofing contractors out of business, and that is cash flow. Those who are working insurance claims know how to navigate some serious hoops. You guys are negotiating with adjusters. You're supplementing with change orders on the back ends. You're fighting for check endorsements from mortgage companies. There's a whole lot. I just scratched the surface that goes in that. And then when the consumer does get these checks, it's funny. Their phone stops working. They're not answering the door. You're having to chase them down. It is not uncommon to go 30, 60, 90 days past a job and you still haven't been paid. But if you choose a financing option like PowerPay, we're going to pay you, the contractor, directly the next day. That's going to solve all your AR problems. And can you imagine, what does that conversation look like to your homeowner when they realize those checks that they had to keep, that's why they're not answering the phone, they can keep them now, and they can have an affordable monthly payment moving forward and still get your services done. That's the game changer in this industry. So it moves us into the second phase. Now we're past denial, and now we're kind of angry, right? We're angry because when we think about it, why are we fighting over price whenever we're losing out to our competitor across the street who could be charging more per square? And it's because they're presenting that financing option. No one wants to lose that guy. We're offering a better quality service, better company, but yet we're losing out simply because they have a tool in their toolkit that we don't have. And I can think of 500 friends that are using financing correctly that are successfully growing their business. I want to include you on that list. So the second part of anger is dealer fees. This is where we miss the mark in financing with restoration contractors. Well, let me share with you that lenders like PowerPay that have a no fee model are uniquely positioned to work with restoration contractors. Because let's face it, why should you pay the bank to send them money? I think it's rude. So financing, they're making it cost money. Sometimes they have confusing programs. We're going to take some time today to kind of cover them. They talk about high default risk. We became roofing contractors because we're skilled tradesmen. We're the best at what we do. We didn't become a banker to install roofing. And I'm not going to ask you to do that. I'm not going to ask you to learn the default risk, these different types of promotion pros. I'm not going to ask you to pay these hidden swipe fees that are built into some platforms. It can get pretty complicated. So at PowerPay, we did want to provide a simple platform that spoke to both retail and restoration contractors uniquely. So now that we've moved past anger and we've agreed, okay, you know what, Mike? There's pros, there's cons, and the pros are outweighing the cons. I am willing to adapt to this new process. And depending on the partner you choose, you may be willing to bear some of the cost because there is significant upside for minimal cost to introduce financing. After all, it's going to generate more leads through your marketing. It's going to significantly increase your close rates. Your ticket average is going to go up. When your ticket average goes up, it goes up in the right way. It's going to increase the profitability and your margins will get wider. You have the ability to cross-sell. Oftentimes, if we're just there working an insurance claim and we're talking about a roof, well, there's other neglected services that our company could offer, such as siding, gutters, windows, you name it. Let's bring them up to the forefront with a finance option. We're going to be able to upgrade from what the insurance like in kind is going to buy. We're going to be able to move up in some Scotchgard protection, maybe a core 4 shingle. And as we talked about, cash flow is king. This is going to save the cash flow of all the roofing business when you use financing. Did you have a question, Jeff?
Yeah. So Mike, talk about that. Yeah. Talk about that. The increased ticket size really interests me right there. And I think you talked about a little bit with cross-selling and upgrading of products. I think a consumer is going to be more likely to go to that next level of shingle or underlayment or add some gutters or add some windows if they know that money's not coming out of their pocket today, right?
That's right. That's absolutely right. And some finance options like PowerPay will let the contractor know how much their customer qualifies for on the front end. And we'll talk about it a little further along as well. But can you imagine the power that is, Jeff, whenever you're sitting across from a homeowner who has a budget in mind, who's very conscious that this is a large and unexpected expense, and then all of a sudden we pre-qualify them and we know how much they qualify for. Let's say, for example, they qualify for, let's just say $50,000 and our roof was 10. Well, you now have $40,000 of opportunity for all those other honeydew items that were previously unaffordable. That's what financing will do for your business.
Right. Yeah. And we had a question earlier this week from a Proforce team member that was asking about doors and windows and siding and things like that. And that's all open. This is not just about shingles. A lot of the contractors out there do more than a roof. So this is available for all those other products and projects as well.
100%. Jeff, I'm in finance. I'm a greedy guy. So let's go ahead and bring it all in.
Sounds good.
Great. So now we're willing to give it a try. There's a lot of choices out there. And I just wanted to use this time to kind of go through the different type of lenders that are in this space and the different type of programs that are offered, because the more you know, the better decision you're going to make on who you want your company to partner with. On the surface, all roofing contractors may appear the same to a homeowner that doesn't know any different. And we know that could be furthest from the truth. It's the same way with lenders. There's various different business models. There's various practices and programs that we offer. And I want to make sure that you have the education to pick the partnership that works best for you. We're going to talk about the three types, which are the broker model, a revolving credit model, and an indirect direct lenders. The programs, we have a lot of promotional offerings in this space. Let's face it, it can get confusing. So we have the deferred interest promotion, the same as cash promotion, equal payments promotion, combo loans. Get kind of crazy. And then we have our installment loans. That is how we think about financing, is through installment loans. We'll cover them. So the first model is our broker model. Some of the things that say broker model when you're talking to different lender partners is, do they have a whole suite of banks that they're offering you access to? And is that access, are those banks developing a direct relationship with the homeowner and paying the homeowner? When you see that in play, you have what's known as a broker model. And these are often a great entry point into financing. The reason why contractors select a broker model is because usually there's no direct cost to them per loan. It's usually passed through in like an annual or a monthly subscription fee. So that's the attraction with the no per transaction business fee. They do have multiple banks, and then with the banks, you're going to get many program types available. However, the checks do go directly to the homeowner. Oftentimes, some of these offers aren't competitive. The banks that are on the platform may be internet-based, so we're having money change hands a few times before it gets to the homeowner. The APRs can get up there. These homeowners can be retargeted by these banks. When you use the broker model, and that universal application goes out to 20 different banks, not all of them are good actors in this space. Some of them are going to start direct mail campaigns and other with that homeowner now that they have their information. And we don't want that sticking with you, the business owner who sent that application out in the first place. So that's a broker model. Once again, a good entry level into financing for those that want the no per transaction fee and are comfortable with just paying a flat or a monthly subscription cost. The next is our revolving lines of credit. There's some really big names in this space that operate on this platform, and it's a great platform because when I say revolver, it's just like a credit card. That's what it means with revolving line of credit. So these lenders are going to have many different types of promotion loans. They'll have a whole suite of offerings, and many of them will have very low minimums, so we can start capturing the deductibles with these types. The bad thing about this type of platform is at the end of the day, it is an open line of credit for your homeowner who, although it's not positioned that way, that's what it is. Some of these lenders you have to incur the additional processing fee. So while you're keeping their costs, those dealer fees, that menu of costs in front of you, you need to add in the 2-3%, whatever it costs to process a credit card, because that is the true cost of using one of these revolving lenders. There's clawback risk, which mean that think of a credit card as a two-way street. We really enjoy the benefits of a credit card knowing that there's peace of mind. If I order something online and it's not as advertised and I get into a dispute with the lender, I can call my credit card company and they'll take care of it for me. So that freedom also exists when you work with one of these lenders, that the money flow is a two-way street. So recourse does exist. Doesn't happen often, but I want you to be aware that it does exist in this space. And then the next are indirect and direct lenders. These are the type of programs that your homeowner believes they're buying into. It's not a line of credit. It's not being passed to multiple banks. They just want a simple loan program. And that's what indirect and direct lenders do. Once again, they'll still have promotional offerings. Many of them will be able to pick up first tier as well as second tier paper, which means that they'll buy down lower on the FICO bands compared to some of the other lenders, and oftentimes their maximum amounts are higher. This really talks to those that are doing large additions, remodeling. Like for example, at PowerPay, we have a maximum of $100,000. We can do a lot with a $100,000 line of credit. So one of the cons with indirect lenders is that it's a three-party dance. So the application has to be initiated by you, the home improvement contractor. Sometimes a license is required, depending on what state you're in, to work with these indirect lenders. Dealer fees, dealer fees, dealer fees. We talked about them with our revolving platform. We're talking about them again because they exist in this space with almost every lender that's out there, with the exception of PowerPay. And then once again, dealer enrollment with these indirect dealers, because it's that three-party dance, because you, the home improvement contractor, has to be there to initiate the application, there's a significant vetting process that goes on. I've seen lenders ask for 2-3 years worth of financial statements, tax returns, background checks on the owners. It can get pretty invasive, and it can take a lengthy amount of time to get it set up with one of those contractors. Direct lenders truly are the best of both worlds here. They're going to offer those true loans that our homeowners enjoy. They're going to allow the applicant, the homeowner, to initiate the application, and it takes out the need for the deep vetting process that goes with dealer enrollment with those indirect lenders. So now that we know a little bit more about the 3 different types of models that exist in the lending space, I hope you feel comfortable in identifying who those are, using what type of platform to make the best decision for you. Now let's get into the promotion offerings. We're going to spend a little time on this slide because this is where financing gets a bad name. And we found that those who can position these products correctly win more. And those that can't can put themselves at risk. And that's the last thing we want to have happen. So let's talk about the 4 different types of promotion loans that exist. And when I say promotion, it's because there's a 0% tied to it. But there's a lot of ifs, ands, or buts in it because they fall into one of these 4 categories. The first one is what's known as a deferred interest program. That means for 6 months, the homeowner enjoys 0%. But because it's deferred interest, interest really starts on day 1, and it keeps accumulating until the loan is paid off. If it's paid off before that 6-month promotion period, or 12 or 18 or whatever it is, if it's paid off beforehand, that's great. The homeowner has enjoyed other people's money for that period of time, and it hasn't cost them anything. Now, if the homeowner does not pay that off in the period of time, interest is going to get backdated to day 1. So there's going to be a lot of compound interest that goes into that. Not to mention, a lot of these deferred interest plans require a homeowner to make a monthly minimum payment, much like a credit card. So in our 6-month example, if the homeowner doesn't pay it off in 6 months, or if they miss one of those 6 monthly payments, they can default. That's 7 ways that a homeowner can default, and then they start capturing all that interest back from day 1. And the interest rates on any of these promotion programs are gonna be kind of scary, guys. We've seen interest rates 25% or more. Just like if you defaulted on a credit card, that's what you're gonna see here. The reason I have 2 dollar signs next to it is because out of all the 4 promotion programs, these are the least expensive to you, the contractor. We're gonna see dealer fees range anywhere from 3 to maybe 10%. And what that means is that whenever you apply for a loan, your lenders will withhold their amount back in the form of what's known as a dealer fee. So if you had a $10,000 loan and there was a 3% fee, they would just keep that $300 and they would pay you $9,700. So out of the 4, these are the least expensive. The next, which is very
So
popular,
normally, Mike, we like to see dollar signs, but in this instance,
this is going the wrong way.
I was gonna say normally this, right. These are not dollar signs that as a contractor you like to see.
That's right. That's right. These are our costs of goods sold. And we realize that. So taking these fees, don't let fees scare you. You can take these fees and build them into your cost of doing business and bring financing into your company. Much like if a distributor or a shingle manufacturer needed to increase the price of a product, you would pass that price along to your homeowner. You do have the ability to do that here. Those of you who are in the restoration space are very challenged to do this. This would be coming out of your profit. That's why oftentimes these promotional programs are not attractive to restoration roofers. So same as cash, that's one of those terms that everybody uses for a promotion loan, but it really just means those loan programs that interest doesn't begin accruing until after the promotion period. So if I offered a 6-month same as cash offer, that means if the homeowner doesn't pay it off, in month 7 there, that's when interest is going to start accruing for them. So there's less risk if default occurs, but there's more cost for those programs to you, the contractor. You know, we've seen programs range anywhere from 5 to 15% on dealer fees for those type of programs. And this is just a broad range depending on how long of a term. The most common terms are 3 months, 6 months, 12 months, and 18 months. So obviously the longer the bank's going to hold the note, the more risk they're going to take, the more they're going to take out of your net profit to offer those loans. The third one is equal payments. This is not widely used in this space because, as you see, it's the most expensive product for us to offer in the market. Now we can look at it 2 ways. One, we could say, hey, this is a disruptor, no one else is offering it, maybe we can do it. But make sure that if you want to go that route, that you're building in the cost to offer these products because they're very expensive. An equal payment is where you say for 24, 36, 48 months, you're going to have one set monthly payment. Now at 0%. So think of a 60-month offer. 60-month for over the next 5 years, we could take a $6,000 roof and break it into $100 a month at 0% interest. It's a very attractive financial instrument to have at the table, but it's a very expensive option to choose as well. So choose wisely if you want to go down that path. The last one, these are all new. This is the COVID-19 response that we've been seeing come out of a lot of lenders. And so I really want to spend some time on this because this is telling you the way that the market is shifting. Combo loans. It's the buzzword in the industry, and it's a real tell sign on what's coming in the months ahead. These loan programs are where you take a deferred interest or a same as cash offer, and then instead of having that really high interest rate on the back end, it rolls into an installment option. The most commons are 9.99 interest for periods of 5, 7, or 10 years. What that is telling us is that homeowners these days want to see installment options. With tomorrow's money no longer guaranteed, they're saying that 6 months, that 12 months is just not cutting it anymore. I need to see a low interest payment beyond that promotion period. Now, these also have $3 signs next to them because you're paying for not only the promotion program, but the installment option that's behind it. If I had to choose between a promotion program or installment, what I'm hearing these homeowners say is that they just really want the safety and security that comes with an installment option beyond it. So why am I paying a large amount of fees for that small promotion period whenever I could sharpen my pencil and offer an installment option at less charge? So that moves us into the installment loans. I've shared with you 3 examples here. Installment loans are your normal loans, guys. These are where you have a customer has a low interest rate for a set amount of time, which is the term, and we can talk about the monthly payments. We get there by knowing the payment factor. So for example, here's 3 offerings that PowerPay has. These are $8.99 interest for periods of 60 months, 120, and 180 months. Please notice that I'm not talking about years when I'm talking about financing, because 5, 10, and 15 years is a long time, but 180 months, it's not so bad. Now, once again, many of these lenders offer no prepayment penalties, so it's about helping the homeowner get to the right payment for them and their family's budget. They can always pay above and beyond the minimum payment and pay it off under their own timeline. And what I mean by that is, using the PowerPay numbers, I can offer a $9,800 roof at this loan product with a 0.0101 payment factor. So for $9,800, I'm going to come up to $99 a month. Once again, the homeowner can always add more to it and pay it off as early as they like. That's the benefits of offering an installment loan. The second benefit, not only to the homeowner, but the benefit to you, the contractor, is that none of these loan options, if you choose PowerPay to work with, cost you any money. There's no dealer fees to consider. So that 5, 7, 10% dealer fees that you may get with a combo loan don't exist with PowerPay. When I think of those small promotion periods, I'm thinking of my credit card. I just signed up with Capital One and got 6 months at 0% at no charge. But if I needed to make a significant purchase like a roof and needed that installment option, it would be great if I picked that monthly payment and I was able to get a cash price at the same time. So if you want to sharpen your pencils and deliver the best price in front of your customer and have a monthly payment tied to it, PowerPay would be a good option for you. So how does financing work? Guys, it's like a gym membership. I know we've been talking a lot about it, but look, if you join up with Planet Fitness and you get that fun key tag and it's costing you $10 a month and you don't go, you got a fun key tag that's costing you $10 a month. But if you want to actually go there, check in, put in the work, you're going to see the results. And it's the same way with financing. This is about shifting the way that our business goes to market. You need to include it. Put it in your marketing. Put it on your website. You will get more leads by your homeowners knowing that you have payment options available. We're going to talk about it when we're at the kitchen table, when we're interacting remotely with our customers now. Let them know that you have payment options available. Talk about it early. Talk about it often. When I was selling in the home, I would mention that we had payment options. When I very first met the homeowner, I was setting my bag at the kitchen table. As I'm walking around and I'm better understanding the scope of work that they needed done, even outside of today, what's on the honey-do list, we're planting those seeds. And those seeds can be planted in monthly payments, which are much more palatable. So if you're using an in-home sales system and you're putting the price conditioning elements in play, there's nothing more effective than when you go to close the sale and you're talking directly to those payment options at the end. If it still doesn't, yes, sir. Go ahead, Jeff.
Oh, I'm sorry. Go ahead and finish this slide, and then I'll jump in for a second.
Yeah. So as we understand, not all sits sell. So if you're with a customer and they don't bite at the time, we hear those objections sometimes we can't get around, running by the spouse, getting other quotes. I get it. Financing works great as a rehash program. Maybe it wasn't discussed and you have a pipeline of leads that are sitting on your desk right now of sits that didn't sell. Introducing financing is a great way to rehash, as well as asking for referrals. Nothing speaks louder than whenever your neighbors, your friends talk about the contractor that they chose to do business with. They're more likely to talk about you if you have something unique about you, like they were able to set me up on comfortable terms that work for my family. Go ahead, Jeff.
Yeah, I just want to remind everybody as we start getting into more detail about PowerPay and how PowerPay works to drop your questions in. I can tell you it'd be much easier to ask these questions while we get to the expert on the line.
Jeff, I lost your audio.
Yeah, I think what Jeff was saying was make sure you drop your
me,
questions
I'm
in.
just going to turn around and ask the expert, so you can cut out the middleman here today if you need to. And we did have one question come in. I know we're about to get into more detail about PowerPay. Can you hear me now? Tiara, you want to try to jump in if nobody can hear me?
Yeah, I can.
Go ahead.
It was breaking up a little bit, but basically, Jeff was saying to go ahead and populate your questions as we get into the nitty-gritty of PowerPay and how financing works with this new offering, as well as we did have a question for you, Mike. Is pre-qualifying a hard pull or soft pull for PowerPay?
So that's a great question. And there's some lenders who do a hard pull, and there's some lenders that do a soft pull. It's going to be really specific on who you choose to do business with. So when we're talking to PowerPay directly, right now it is a hard pull. So more to come on that.
Okay, great.
All right, so thanks for giving me the time to talk about the space I'm in. I love it. I love working with contractors and helping them grow their business. And so I chose specifically to move to PowerPay a couple months ago when I learned the program that they've developed. And this platform uniquely talks to not only our retail contractors, but also to those restoration contractors that no other lender has done in the past. And I just had to be a part of this company once I realized that, because I love working with restoration contractors, and I knew that this was going to be the cat's meow. So that leads us into Tiara's 5 ways that PowerPay makes financing simple. The first off is there's no dealer fees to juggle with, guys. It's amazing. Why are you paying the bank to send them your business? Why are you giving up your net profit so that you can present a payment option at the customer table? You don't have to do that. PowerPay recognizes that. We want to say yes more. We're going to talk about that. I love saying yes. I say no, but I'm saying no at the right times. I'm going to talk about how easy it is to enroll, especially as an Atlas contractor. I'm going to show you how we're going to help you meet the customer where they are. These are uncertain times, especially with this pandemic. I'm going to show you how getting PowerPay implemented with your company can be overnight, and we're going to meet the customer in many different levels. And it's going to give you those sales tools. Many of the ones we previously talked about are going to be available with PowerPay. So going right in, who is PowerPay? Has anyone, PowerPay is going to be a new name for many of those contractors on board, and that's great. They came into this space contractor focused. This company was founded by a home improvement contractor in the power generation business, hence the name PowerPay. When I say power generation, I'm talking about those backup generators. And you know what? He was sick and frustrated of paying significant dealer fees to lenders. He knew that he was closing on payments, and he said, you know, I can develop these banking relationships that I already have and develop something myself. Many of the strongest platforms used today are coming from those contractors that are entrepreneurial and build their own tools, from CRMs to aggregators. Well, this is the first financing platform that was built by a contractor for contractors. We're not a bank trying to get into this space. We're a contractor trying to give you the best banking options. So with that, we work in all 50 states. We provide not only the first tier, but all the way down to the second tier financing. A lot of lenders in this space are removing their second tier programs, and we're coming at it hard. So that's where we're going to say yes more. There's no prepayment penalties. All of these simple loan options your customers can enjoy by paying the monthly minimum and paying out the term, or pay it off as early as they like. I can't think of an easier sales solution than that. I'm going to give you an instant credit decision. When the customer applies, you're going to immediately know a yes or a no. We are a direct lender. That tells you that the homeowner can initiate the application. That's going to make our go-to-market strategy significantly easier for you. And most importantly, we're going to pay you, the contractor, directly. This is not a broker model. We think that you got the work, you need to get paid. I don't want to put your cash flow at risk by having that homeowner collect a check and all of a sudden they go dark on you. So that's who we are. And we are exclusive with Atlas right now. So you're not going to hear PowerPay mentioned from other shingle manufacturers and other reps. Your Atlas rep has the keys to unlock this platform. So we talked about no dealer fees. Let's talk a little bit more about what's included in our program. Our loans start as low as $1,500, so we can capture most of those deductibles. Let's face it, under $1,500, maybe a short-term solution that a credit card could offer is a better fit, but our maximums are going all the way up to $100,000. That means for those who have Murphy show up on the job site and we have those higher maximums, we're going to be able to get you across the finish line in those cases. We're on what's known as a risk-based model. That means your customers that have good credit are going to see interest rates starting at 8.99. But we want to say yes more. So we're going to go all the way down to that 600 FICO score, and those homeowners with the lower FICOs may see interest rates at 14.99. Now, I don't want that to scare you, because guys, it's been my experience as I look at these loans come across my desk every day, that the lower the credit score, the more likely we're the only ones saying yes. Those go to the book more than others. So once again, we're saying yes, starting at 8.99 up to the 14.99, all the way down to a true 600. We have loan terms of 5, 10, 15-year programs, which I should have wrote, shame on me, as 60-month, 120-month, and 180-month programs. Our payment factors are right there, and we have a tool that will auto-calculate those monthly payments so you don't have to do the math. Once again, there's no fees, there's no swipe fees. We're not a credit card platform. There's no annual fee, monthly subscription fee. There's no monthly volume minimums. As an Atlas contractor, we are bringing you in. This is pay for play. We believe that you bringing us loans is the way it should work. I don't need to charge you for that business. So thank you. We will reward that activity by not charging you. So once again, you will get the full amount you requested. So if you're working on insurance proceeds and the insurance company says that this is the amount, you're going to get paid that full amount. Your homeowners can now keep those ACV, RCV, depreciation or supplement checks. They can keep all those as they come in, and they can apply them towards our loan or spend them however they seem fit. But what's important is you're going to be made whole with PowerPay. There are no dealer fees getting taken out of this loan. So I told you I love to say yes. And when I say yes, that means that first we're going to sign up contractors. If you're a gold, if you're a platinum or a diamond, you've been vetted. We've taken those vetting policies and adopted them by Atlas. You're in, you're approved. We just need you to apply. To those contractors that are silver level or maybe new to Atlas, we're still going to expedite your onboarding. We're talking a matter of 2 to 3 days to have you live on the platform. But if you're a gold, a platinum, or a diamond, you're already approved. We can begin doing loans today. And when I say today, I mean enroll today, lend today. Somebody's doing it. I guarantee somebody's using their pro portal right now. They're clicking on the PowerPay option and signing up. I wouldn't be surprised if I see a pre-qualified loan sitting on my desk by the time this webinar is over. It's that easy. Sign up, and let me show you how. Well, I'm sorry. On the next slide, I want to show you how we go to market, because we want to touch the homeowners where the homeowners are, whether they're in person or, more importantly now, with remote selling. Maybe they're on our website. We're using it as a rehash program. We're immediately going to give you all the tools to get payment options to your customers. That means by signing up today, you're going to get access to a unique link. You can have a widget, a banner, a full iframes page on your website available immediately whenever you sign up. And we do have a mobile app coming out real soon for when we get back to the in-home sales environment. So the sales tools that we talked about, when you sign up with PowerPay, we're going to give you instant approvals. That means as soon as the homeowner applies, you're going, and I'm pushing for time here, Jeff, but when your homeowner applies, they're going to see that they are approved. But you, the contractor, are going to see how much they are approved for and at what interest rate. That means you get the ability to contact your customer, say, congratulations, you've been approved, and start talking directly to the monthly payments. Think about that. If you were at a $10,000 roof, but you knew that they also wanted gutters for an extra $2,000, now you can start talking about the monthly payment for doing both of those products instead of just going off of the roof price alone. It's a huge tool. What happens when you get that maximum loan amount? Not only the cross-selling example I talked about, but you're going to upgrade the roof services. Atlas is phenomenal in their marketing. That's why we're part of the Asphalt Life community, is because we know that Scotchgard sells jobs. So let's get those designer shingles on there. Let's go ahead, let's upgrade to the Core 4 so they can receive those insurance benefits of having a Class 4 shingle on their roof. All of those are now possible because we've given a very generous pre-qualified amount offer available to you, the contractor, first to go out and sell. And once again, with us paying directly to you the day after completion, goodbye to all your AR problems. In fact, you got AR problems sitting on your desk right now, send them over to me. I'd like to help you out with that. So guys, the 5 ways that we make financing simple and how we address retail and restoration contractors is there's no more fees for you to have to juggle. For those of you that are in a retail space, maybe you're working with another finance lender, they're not buying as deep as we are, and they're not doing it with no fees. So retail contractors that want to sharpen their pencils and deliver the lowest price to their homeowners and buy deeper, we are the solution. Restoration contractors working off of that insurance scope, we are the solution. We say yes more. We're going to get you signed up on the program. We're going to qualify more homeowners for our financing options. The enrollment is as easy as going to the AtlasPro portal today and signing up and be doing loans this afternoon. We're going to give you all the tools to meet the customer where they're meeting you. And we're going to give you the sales tools to enjoy the benefits. So if we don't mind, I know we're at time, let's take just a few extra minutes, and I'm going to show you the tools you're going to get when you sign up today with PowerPay through Atlas. So when you sign up, the great news is today is the day. Breaking news, you have the PowerPay button available on your Pro portal. Under the financing and cash flows, it's there. When you click on it, you're going to get to an easy application. So,
yep. And Mike, I was just going to add in, you know, the steps to signing up are really, really simple, guys. So like Mike said, you do just log into your Pro account, and Claudette, if you'll go back one slide, it's all in there for you right under that financing and cash flow solutions bar. Just log in there and you can easily get signed up. It's free for contractors that are currently interested in signing up. It's exclusive. This PowerPay offer is exclusive to AtlasPro contractors. And guess what? An account is completely free. So just log into atlasroofing.com/pro, and we'll put that in the chat. And Mike, we're hoping that by the end of this webinar, we do have quite a few people signed up, and we have lots of questions coming in around financing and some of the other things. So I definitely want to get to those. But let's jump back on to make sure you're able to walk through the process for enrollment.
Let's do that. I look forward. We'll field all the questions. Let me share with you the 3-step setup that we have here at PowerPay. It is truly a simple and fast process, and I want you Atlas Pro contractors to get access to all these tools today. The first step is right there on your Pro portal. You're going to see this simple application under step 1. We're not asking anything scary here, guys. What's your name? What's your email? Let's get you set up. So as soon as you click that button, you're going to get an email from us that gives you your unique dealer ID. Once again, it's also going to ask for your Atlas status. Please select that down at the bottom as well. We today are getting everyone vetted in and set up immediately. So you're going to see an email that comes with your dealer ID right away. Click the link in that email. You're going to have the ability to go to our website at getpowerpay.com and sign in. And when you sign in, step 2 is going to be, and maybe it's a little fuzzy here on the slide, is you're going to see the account setup tab. That's where we're going to ask for your tax ID number, your bank account information. This is a private and secured site, and we need to know where to send the money. That's kind of a big deal in this thing. So we're going to ask for that information. We're also going to ask for a government ID of a principal in the organization. So once you know what we're asking for, grab that data, slam it in there. It's just going to take a few minutes of your time. That's the second step. Step 3 is clicking over onto the Add Users tab and start letting us know, who do you want to have access? Who's getting the keys to the castle? It's that easy. So setup is now done. This is a 2-for-1 special right here, because right here after we've set up the users, click over to our onboarding tab. You're going to see that we have 6 training slots available every week. So every Tuesday, Wednesday, or Thursday at either 10 or 2 Eastern Standard Time, we host live webinars where we show you how to use the PowerPay platform. Please jump in there, sign up. It's that easy. So now that you're set up and you get your training, you're going to be good to go. On the next slide, so look, sales tools. These tools will be turned on right away when you sign in. I shared with you that there's going to be a link, a widget, a banner, an iframe. All of those are available today. So contractors that are cool with coding, have a website person that gets this, we can put these on your website immediately, and your homeowners can start sharing, putting in applications. What that means is if you want to start a rehash campaign today, if you want your sales reps to start directing them to your website for financing, I can't think of an easier ask. The custom link is unique. Add that link into your signature and really call it out, because you will be surprised the amount of email correspondence and the amount of applications that you're going to get just by putting that link in that one easy step. So all those available right away today. In the last tab that you're going to have available is our marketing pieces. This is ever evolving, so please check in regularly. We like to develop new marketing materials, fresh pieces. So we're going to develop co-branded pieces for Atlas contractors. Check in, because that is always going to stay current with the times. COVID pieces, Atlas pieces, and then at absolutely no extra charge. I know some people are having problems sleeping at night. We solve that solution too. I've got all my disclosures and agreements available for your viewing pleasure. It's all right there, and you'll have it all available today in the next few minutes, right after you sign up under your AtlasPro portal. So guys, once again, PowerPay, we've solved it. We've put the round peg in the round hole for restoration contractors. We talked to retail contractors, buying deeper, no fees to juggle, saying yes, qualifying more customers, getting more contractors signed up on the platform, meeting the customers where they are by emails, in your 10-step selling process, on your website. We have all the tools for you to be able to capture the pre-qualification and go out there and sell more and additional services. That's how PowerPay is finally making financing simple. With that, I'll open it up to questions.
Yeah, awesome stuff, Mike. Thank you very much. That was great. We had he and I had kind of talked about doing some back and forth throughout this, but I mean, Mike, you were on such a roll. There was no way I was interrupting the flow of what was going on there. It was fantastic. Just a great job explaining the PowerPay model. We do have a couple of questions. One, what credit score is needed to obtain 8.99, and is that the lowest rate available?
Great question. So 8.99 is the lowest APR that's available. You'll find that that's more competitive than many of other lenders who are offering a rate starting at 9.99 for those longer term programs at no fee. So with the credit scores, we do buy down to a 600 with the FICO. I want you to maybe take a second and let me explain that there's more than just credit scores that go into our decisioning. We're looking at various factors such as what's the debt to income ratio? You know, what does the credit history look like? Is there bankruptcies in the past? How far off were they discharged? So there's a few factors. So for me to say that there's a set line in the sand for 899 would be a lie. With those few factors, you will find that many of the customers who my competition is saying yes to the 99 offers, we are saying yes at the 899.
All right, another question along those lines. Would a 600 FICO and a stated income of $3,500 a month gross income get an automatic approval?
Yes, once again, as long as the other factors are yeses as well to us, absolutely.
Okay, great. All right, I don't see any other questions in the queue. Thank you guys for hanging in there. I would tell you that if you're on the AtlasPro Force side, please send me or Tiara questions. We have a direct line to customer service at PowerPay also that are broken out by regions. For the contractors who have joined us today, thank you very much. We appreciate you hanging in there. Get PowerPay. Well, we're going to send you to the Pro portal to sign up. You really have nothing to lose. Jump in there, check it out. If you are offering financing, and if you're on this webinar today, I think you're interested in offering financing, I think this is a great new option through Atlas that you can explore. So, Tiara, any final words?
No, I'm excited. Thanks for everyone who jumped on today. And until then, guys, have a great week, and we'll see you next week.
Thanks for
everybody.
having me.
Thank you, Mike.
Thanks, Mike.
You bet.
Thank you, everyone.